Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. The SEC and CFTC just delivered the clearest regulatory framework for crypto in over a decade, while Bitcoin slid to $70,126 as the Federal Reserve held interest rates steady and warned that inflation pressures remain elevated. On March 17th, SEC Chair Paul Atkins announced that most crypto assets are not securities, formally classifying Bitcoin, Ethereum, Solana, Cardano, XRP, and other major tokens as digital commodities. This represents a dramatic shift from the enforcement-driven approach that targeted Coinbase, Kraken, and Ripple. The guidance established 5 categories: digital commodities, digital collectibles, digital tools, stablecoins, and digital securities, with only the last category falling under SEC jurisdiction. Mining, staking, and airdrops received explicit exemptions from securities classification. The Federal Reserve held its benchmark rate at 3.5 to 3.75% on March 19th, raising its inflation forecast to 2.7% from 2.4%. Chairman Jerome Powell cited rising oil prices from Middle East tensions as a key factor. Bitcoin dropped nearly 4% to around $71,000 following Powell's press conference, while Ethereum fell over 6% to $2,172. Over $158 million in leveraged long positions were liquidated within 4 hours. US-listed spot Bitcoin ETFs recorded 7 consecutive days of inflows totaling $1.16 billion through mid-March, with BlackRock's Ethereum staking ETF attracting $104.7 million in seed capital. However, Wednesday marked the first daily outflow of approximately $129 million as prices declined. Nasdaq received SEC approval to trade tokenized securities in a pilot program, allowing participants to settle trades as blockchain-based tokens. Tokenized shares will trade alongside traditional shares at the same price with identical rights and ticker symbols. This infrastructure could enable near-instant settlement and around-the-clock trading for the $126 trillion equity market. FTX announced its 4th creditor distribution of $2.2 billion scheduled for March 31st, bringing total payouts to over $6 billion since the exchange collapsed in November 2022. US customers in certain classes will reach 100% recovery, while some creditor groups will receive 120%, including interest. Canada's financial regulator FINTRAC revoked registrations for 23 cryptocurrency firms on March 18th. CryptoMus received $126 million in fines for failing to report suspicious transactions, and KuCoin faced $14 million in penalties. The Senate's Clarity Act is advancing toward a banking committee markup in late April, with Senator Cynthia Lummis confirming that key compromises on stablecoin rewards and DeFi regulation have been reached. Tight timelines and upcoming midterm elections create pressure for passage before Memorial Day recess on May 21st. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.